Bretton Woods is dead. The world needs a new financial architecture. The global financial system is changing faster than institutions that were designed to govern it. Bretton Woods was created in the 1944. Think about that for a second. There was no internet, no fintech, no blockchain, no cryptocurrency, and no instantaneous global payments. No digital banking as we understand it today. China was not the economic superpower it is today. And the architecture of Bretton Woods were designing a financial system for an entirely different world. Understand the original system. Currencies were linked to the US dollar, and the dollar was convertible into gold at a fixed price. But in 1971, the United States ended the dollar convertibility into gold. The original Bretton Woods monetary system effectively died. What remained was an international financial architecture heavily centered around the dollar, Western financial institutions, correspondent banking, and eventually predominant floating fiat currencies. That architecture helped facilitate the decades of global economic expansion. But the world has changed. We are entering a multipolar financial era. Today, the dollar remains the world's dominant reserve currency. But now we also have the euro. We also have China's yuan. We also have enormous emerging economies. We have fintech companies capable of moving value internationally almost instantly. We have stablecoins and blockchain networks. We have tokenized assets. We have mobile banking. We have a decentralized financial technologies. And central banks around the world are experimenting with new forms of digital money and settlement. So my argument is simple. You cannot run the financial economy of the 21st century entirely on architecture conceived for the world of 1944. We need another layer. And that is where I believe the Encarnacion free trade economic model becomes important. I'm not trying to replace the dollar. This is important. I'm not proposing that the world abolishes the dollar. I am not proposing that countries surrender their currencies. And I am not proposing another centrally controlled global currency. I am proposing almost the exact opposite. Let countries maintain monetary sovereignty while we build a financial architecture capable of connecting those economies efficiently. The dollar, the euro, the yuan, the peso, the real, the rupee, whatever currency a sovereign nation chooses to use. Let's market established exchanges rates, but build modern financial infrastructure capable of allowing those economies to trade, settle, and invest across borders efficiently. Local economies must matter. My model begins with a principle that I believe globalization sometimes gets backwards and confused. Strong global economies begins with local economies, with strong local economies. If globalization destroys productive capacity at the local level, eventually political instability, inequality, and migration pressure follows. So free trade should not mean destroying one economy so another can dominate it. It should mean allowing economies to specialize, produce, innovate exchange value. And purchasing power parity gives us another important lens, perspective on how to view this. A dollar of a nominal income does not represent the same economic reality everywhere else. What matters is also what can people actually purchase with their incomes inside their local economies. That is why localized purchasing power has to become part of how we think about global prosperity. Fintech changes the equation. This is where banks should pay attention. The future of international finance isn't simply cryptocurrency versus banks. I believe the bigger opportunity is banks plus governments plus fintech plus digital settlement plus sovereign currencies. Banks don't necessarily disappear, they evolve, they grow. Governments don't necessarily lose monetary sovereignty, they gain what? Better infrastructure. Fintech becomes connective tissue between the economies and regulated digital settlement technologies that can potentially reduce friction and settlement times and costs while increasing the transparency. That creates an architecture where technology serves the financial system instead of attempting to destroy it. Why? Governments should care. Governments need an architecture that can preserve sovereignty while increasing access to global capital and trade. Developing countries shouldn't have to choose between economy's isolation and surrendering control of their economic future. They should be able to strengthen their domestic production, attract investment, trade internationally, and participate in modern financial networks. The objective becomes localized economies, sovereign currencies, purchasing power awareness for modern fintech, competitive markets, and open international trade. Why banks should care? Banks have an enormous opportunity in this transition. The institutions that successfully connect traditional finance with regulated digital infrastructure could become more important, not